All right, good morning, everyone. I want to do a quick early morning market review after we had Fed minutes released on yesterday. Let's take a look and see how our markets are faring and what we can expect possibly going forward. I'm going to start off by taking a look at a daily chart of the S&P E-minis, and I'm going to draw this out because I did a lot of work this morning just to take a look at current zones that the S&P E-minis futures is still trading in. All right, so I have some area of diagonal resistance, and I have an area of horizontal resistance. These solid lines is going to represent my horizontal resistance areas, and then these dashed lines, they're going to represent areas of diagonal resistance as to where the markets will have to get through first before it can really have a sustainable move higher. And it looks like over the past 2 days that the markets have been struggling mightily to sustain a meaningful rally. Now, with that said, the past 3 days have been positive for the major averages, but it hasn't been like it's been very strong movement. These last 4 days, including today, starting off pretty positive, but the moves have not been strong enough to really punch through in a meaningful way all of this area of resistance that has to deal with. So right now, again, early morning movement, positive for markets. I'm going to be paying attention to this very, very closely to see they can really punch through, have a sustainable move higher. If for some reason they can, here is some areas of resistance that you need to be mindful of. And I want to continue to point out these areas of resistance because we're still in the bear market, folks. And when price action, rallies for a couple of days in a row and then it hits a strong area of resistance, sometimes it can have an immediate reversal, and it can reverse hard and fast because the reversals are a lot stronger and harder than these bear market rallies. With that said, I'm going to point out some areas to pay close attention to, so price ranges. We had a hard reversal here. That was around the 27th of June, and market closed right back down below a level of resistance. Then we're starting to rally again. So this is going to be a strong area of resistance, and that price action is right around, let's see. So this price action is some diagonal resistance right around 39.50. Let's look right around 39.50. So if the S&P futures can find a way to rally beyond where it is now, it could go up to about 39.50. And if it does make it up to around that 39.50, it's going to run into both diagonal and horizontal resistance. So at that point, we're definitely looking for a hard reversal if we can rally back up to that point. So that's the area that we need to pay attention to. If we find a way to bounce beyond where we are now, find a strong move above this 38.65 level and march on to 38.70, then we can see we get above 38.70, then we can start to see a nice little move higher. So 38.70, we get above that level, we can definitely see a nice move higher in the S&P futures. Then between that 38.70 and 38.70 and 39.50 is an area that I'll be looking for some type of reversal in the market if we can continue this rally as we go throughout this day. So be prepared for any type of sudden reversal in the market because it could happen before this week is out. So let's look at the S&P E-minis. And I want to focus on some of these daily charts. So we are still in the bear market overall, and we're going to look at some of these resistance levels, near-term resistance levels as the market continues to rally within this bear market rally. Let's take a look at Dow Jones futures, same scenario. It's in rally mode still. But again, I look for anything significantly strong, but we still can see some movement to the upside. Levels to watch here is horizontal levels of resistance. It's solid white line, and then they got diagonal. Which is the dashed lines. And let me correct this one. So right now, price action is looking to break above this level right here, which is at around 31,552. So the Dow Jones futures get above 31,552. We can see a nice little sustainable rally up to the level of horizontal resistance, which would take it up to another couple hundred points. So we could see some decent movement today in markets if we can get beyond some of these areas of resistance. And if we fail at any one of these areas, watch out below, because it can be a hard reversal to the downside. It's Dow Jones futures. NASDAQ futures, same. NASDAQ even looks a little bit tighter. It looks just a little tighter than the others. So NASDAQ, here's a horizontal resistance. We are trying to march right above that level now. But these moves just look so much tighter. We got some diagonal resistance right here, right around 12,269. 12,269 is what we can watch for diagonal resistance on the NASDAQ futures. Then if we punch above there, the ultimate level of resistance in the near term, right around 12,900. Then if we hit either one of these resistance levels and have a hard reversal, just be mindful, those hard reversals can be sharp and fierce. Hence, like the one we had here. Sharp and fierce. So that's something to pay close attention to. All right, and now let's take a look at the Russell futures. Russell futures also another tight one. So Russell futures, here is our area of diagonal resistance. So the Russell was trying his best to, folks, these markets are like running on fumes. So these rallies are like, we're just looking for a reason to reverse. So these moves can be very, very muted. It can be very, very quick, and then it can reverse real quick. So keep that in mind, that the market's like they're running on fumes right now before the next major move down. But Russell looks like it has diagonal resistance right around 1794. Around 1794. So we could see it move up to that level, and if we don't, then we can see immediate reversal. And then just above that, we have horizontal resistance. So that's what we need to look for on the Russell futures. And look at crude oil. Now crude oil is in the mix because it started making big moves the other day. So crude oil has been shifted into a trading zone as well. And it's in a fierce downward channel as far as horizontal resistance. Here's a channel that crude is in now. At the bottom of the channel now, so crude could find a way to rally. And then it has to deal with diagonal resistance right around 101. And then it can make it back up to the top of the channel, which is around 105, 106, 105. Then if it makes punches through that, next level of resistance is right around 110. So that's what we have forward to look. That's what we have to look forward to today. Again, my personal opinion, I think by sometime between now, and by close of business tomorrow, we're probably going to see a lot of this start to unravel. So that's just a possibility if we do get, any type of rally out of this today. All right, folks, hopefully this is helpful. And I'll try to check back with you guys later in the day to see how this all plays out in this market action today. All right, check you guys later.